Good afternoon, everybody. It's Paul here. Here we are, afternoon, Monday, 1st of July 2019, session 45 of the Admiral Markets webinar series of Mastering the 4 M's of Trading. My name is Paul Wallace. I'm a trader, analyst, and coach, and I'm your guide through the series. And as always, we'll just begin with a quick risk disclaimer before we look at the main agenda for our session. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. This presentation and the accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with the maximum payout of £50,000 sterling as per our negative balance protection policy. There are many good reasons to trade with Admiral Markets, ladies and gentlemen. What you can see there is that for two of the most popular trading instruments, namely the DAX 30 and the Euro Dollar, Admiral Markets offer very competitive market spreads during the main market hours. Also, they offer both of the MetaTrader 4 and MetaTrader 5 platform with their own Admiral Markets Supreme Edition plugin. Admiral Markets is also a truly global brokerage and is registered and regulated in many entities across the globe. If you speak to your account representative, they will be very happy to guide you in opening your account in the most suitable entity for yourself. As always, our expectations for the session is for me to educate you about that 4 M's of trading so you can go away and analyze any market and be ready to trade it, and help you raise your self-awareness about managing risk and managing yourself. For yourselves, ladies and gentlemen, we always have a broad range of experience in the room, and I appreciate we have time limitations. So sometimes we can't go into the depth that we would always like, but we try and focus on tools that you can utilize tomorrow in your own trading. So the 4 M's of trading has all been about understanding markets, method, money, and myself. Because as we discussed right from session 1, is that invariably when a trader is on top of all of those 4 M's, when they are mastering those 4 M's of market, that is when the sweet spot occurs whereby a trader tends to operate at their most effective. And that's what we're always trying to do. The more you actually understand them, the more you're aware of them, the better you are able to master those 4 M's of trading. What we've looked at over the last month as we draw our webinar series to a close is that we are taking our learning points from the series about how to prepare ourselves for a trading day, which we did a few weeks back. We looked at how we actually follow our 10 steps. How do we do our market analysis, which is of course the sort of market of the 4 M's. We've looked about choosing our entries and about how we can manage our risk. Very important about how we record and review our trades and about how we manage our trading performance. And part of that over the last couple of weeks, if you joined us, was we talked about the various ways that cognitive biases rear up in our trading and how we can actually sort of help recognize them and also hopefully maybe do 1 or 2 things to alleviate them in terms of their ability to do us damage within our trading. So, as we go for this kind of last couple of sessions, what I want to do for the next couple of sessions is really just sort of, sort of walk the talk. You know, this is what we've gone through over the last few sessions, and what I want to talk about is, let's just go and have a look at actually how we follow our 10 steps, because remember, that was all about process, discipline, and self-awareness. And we're going to have a little sort of an extra element of it today, which we'll talk about in the next slide or two. But, you know, for those of you who've joined us, you know, many times throughout the series, or whether you've been watching this on demand on the Admiral Markets YouTube channel or on the Admiral Markets Global Facebook page, you know, we have talked about from about sort of session 6 or 7 about the importance of actually having sort of 10 simple steps that you can follow as a new trader to ensure that you're following the right process. And we've been through this many times, and I always touch on it sometimes in depth, sometimes just quickly going through it, because what I've wanted people is to, as you listen to this every week, as it starts to become your natural way of operating as a trader. Okay, you know, that we've talked about is that whenever you open a chart as a trader, regardless of whatever you particularly trade, whether it be 5-minute chart of Bitcoin or the monthly chart of gold, the first steps we do is we always look to define our levels of support resistance. We always look to see if there is a trend in place. We're always looking to the third step is to see how price reacts when it's at those key support resistance levels, and that's an element we're going to sort of touch on quite a bit today. And we look at, you know, what kind of price action signals, you know, are printed at those levels, because that might actually give us a trading opportunity. And also, is it part of a bigger chart pattern? That's one of the things we're kind of intrigued to sort of to see, because that might help us in terms of our trade selection, and also about where we're looking for our particular entries and targets. You'll know by now that, you know, step 6 was all about make sure you define your risk, okay, and accept it and stick with it. Step 7 is always about your rewards, okay, are we using a target or we're trailing, about how it's important for you to know your exit before you even enter the trade. Step 8, we talked about, you know, keeping records, because that actually leads on to step 9, which is once you've got good records, it's important for you to review them so that you can improve your performance by debriefing your trades. And step 10 is about, you know, repeating, okay, and about how, you know, the consistency and discipline are key. Okay, it's very difficult to be one without the other. It's very difficult to be consistent without being disciplined, and it's very difficult to be disciplined without being consistent. So, you know, you've heard us go through those 10 steps, you know, time and time again, okay, over the last sort of what has been 8 to 9 months, okay, and you know, and as I said, it's about the more you hear it, it's almost as if it sort of sinks into your own sort of subconscious via osmosis, if for anything else, and actually helps you develop your own trading habits, trading behaviors, trading processes, all of which are key as a trader. So we're going to have a little look at that, because we're at an interesting sort of little point here, okay? And what we want to look at in particular today is have a little talk about the monthly candle, okay? Something that's not really looked at a great deal normally by educators or webinars, but you know, here we are, you know, when we're sort of doing this here today, it's the 1st of July, okay, 1st of July, Monday, 1st of July, sort of 2019. So, you know, we have the start of a new month, okay, it's also the start of a new quarter, and we're in the sort of a start of a calendar Q3, okay, for those of us in Europe, and so you know, it would appear an ideal opportunity for us to discuss the usefulness of looking at monthly candles. Right now, it's just not a case of everything that we have discussed and talked about, okay, over the entirety of this series. You know, I've always been very keen to stress that, you know, in terms of, you know, the actual process you follow, regardless of what timescales you look, but also things like the price action signals that we've talked about. You know, they are instrument and time frame agnostic, regardless of whether you end up being as I said, maybe, you know, 5-minute chart trader on Bitcoin, or you're a monthly trader on the S&P 500. And that's a little bit the same about with monthly candles, okay? And that's what we're going to have a look at today. Okay? That's one part of what we're going to look at today. What I find is that some people like to also add a 12 EMA to their monthly candles. Pretty standard in the sense that they are looking and hoping that that sort of 12-month 12 EMA is effectively they're sort of giving them an indication of what's gone on over the last year, maybe the last year's momentum. But what we'll do is we'll show you on charts how how we can look at that and see how that can actually help us as a trader. And I appreciate some people might be watching this saying, well, Paul, I'm a 5-minute trader on the euro dollar. What could possibly be of interest to me to look at the monthly candle? And that might be a very valid point. It might be a very fair point, okay, that if you're trading down at the 5-minute charts level, okay, that the monthly candle is just completely unrequired, completely sort of not important. But what I hope, we're going to transfer across to the chart at the moment. Hopefully what we'll be able to see is that trying to understand the kind of that bigger picture can help us even when we're a very short-term intraday trader. Okay, we've spoken a lot about how as a trader of any kind of time frame, we don't want to be buying into resistance or selling into support. And if we're able to identify particular areas that, especially from the monthly chart, well, that can give us a real real assistance in terms of just making sure that we don't fall for that kind of selling into support or buying into resistance type of behavior. So, as I said, we want to have a look at that. And, what I want to do over this next couple of sessions is about, take the kind of 10-step plan that we have discussed, have a look at the monthly candles today and see how they're set up, okay, based on how they've completed and how we're looking at, how we saw the sort of first 6 months of the year go. And also, we'll start with having a little look at the kind of US dollar trading plan that we discussed some time ago, okay, a few weeks back, right, about how appreciate that we've covered an awful lot in terms of education material, but we've also looked at broad sweep of instruments. And actually, what might help is to effectively have just to start with maybe just focusing on the US dollar. All right, especially for the FX pairs. It's I keep saying it's the big daddy. Okay, it's the number one currency in the world. It's the major reserve currency of the world. The commodities, okay, whether they be physical, okay, like oil, or digital, like Bitcoin, are priced, in against the US dollar. So actually, being able to even just trade the US dollar, it provides you with a lot of opportunities. And as we said there a few weeks ago, okay, you can use our 10 steps, all right, just to determine is the US dollar bullish, bearish, consolidating, or just plain choppy, all right. And then if it's trending, when we can see which are the best pairs to trade, identify clean, strong trade, if they are there, okay, if they're there. And then, wait to see how, we get a confluence of events, all right, price action signals at level of support and resistance. So that's just, steps 3 and 4 that we've discussed, for months on end, right? And then look to sort of enter trades in line with the trend based upon the price action signals that we've been provided. Make sure that our trades are position sized and risk managed, and that we record our trade details and review that trade post completion. And as always, once you've got that data, well, then you're able to adjust it from the data you have, okay, and just repeat. All right, remember that's almost like step 10, okay. Being able to repeat it, because that is what provides you discipline and consistency. So that's what we're going to look at. We're going to look at the US dollar and how that folds out, but also have a look at the monthly candles, okay, just to sort of just help you get an idea of what you're looking for in the monthly candles, how it can help you, what you can how can you can utilize that for the rest of your trading month. So, we're going to switch across to the charts in a moment, as always, just to go through it. It's easier for me, especially with monthly candles. We can just go through it as if you were working on a desk at an institution, because that's what I do, and I'll talk you through it. Okay. So, as always, right, whenever you're looking to trade, remember to see how you're managing those 4 M's of trading: markets, method, money, and myself. Are they all in alignment? Okay, because if they're not, then you shouldn't be expecting outsized returns. It's about constantly monitoring those 4 areas and also upskilling yourself, okay, in terms of skills operating in those 4 areas, but also the knowledge and the self-awareness and the processes within all 4 of those areas. As always, if you have any questions about this webinar or about Admiral Markets offering, then by all means you can get in touch with us. We'll be very happy to help. You can call us on that London number of 02035 140756. Drop us an email or hello@admiralmarkets.com. You can watch this or and the rest of the series on the youtube.com/Admiral Markets channel or on facebook.com/Admiral Markets Global. So it said, if you just bear with me a moment, we'll just switch across to the charts, and then we'll have a quick look at the monthly candles and the our US dollar trading plan. Super. Well, I'm hoping that you can now all see the still see my charts, hear my voice. Okay. So let's as I said, let's have a look here. We've got I've got a dollar profile here. You can see it's sort of selected down there at the bottom. This is the Admiral Markets MetaTrader 4 platform. If you're very new to trading and not really sure how to set up your profiles or charts, you can go back and find it. We did actually 2 or 3 weeks, a couple of months back on the setting up profiles and setting up charts so that they're available and easy for us to look at and identify, to sort of give you a bit of help and actually how to set these up. Our charts are always the same, which we'll look at in a moment, and also we were just setting up profiles for. We set up profiles for each of the big major currencies, okay, and also we set up one for some of the equities that we like to watch. We also, for some of the indexes, for some of the commodities, and also even for some of the cryptos that people like to follow themselves. So here's the so here, as I said, here's the US dollar. Let's have a little look at let's start that big picture in terms of the the sort of the dollar and the monthly candles, okay. Now, remember, this is the 1st of July, so I appreciate that, if someone is watching this in what could be a couple of days, weeks, months, etc., to try and understand what's going on at that particular time, at this particular day. So it's as I said, it's Monday, 1st of July, and actually this weekend has been a rather interesting one. It was the weekend of the G20, sort of the end of the G20 summit, and then Mr. Trump, the US president, flew to Korea. And then invariably went up to the demilitarized zone and actually walked into North Korea and shook hands with the North Korean Premier, Mr. Jong-un. And of course, it was a great photo opportunity and all the likes, and completely quite unexpected. It sort of took the world by surprise. So invariably that has an implication on markets, and actually what we've seen is that we've been seeing a little bit of a risk off mentality at the moment, because why would that be? Well, if you think about it, from last week from the G20, the sort of Mr. Trump sat with the Chinese and they said they're going to start talking again about a trade deal. Then he went to he went to North Korea and spoke with the premier, and wants to sort of basically move forward on denuclearizing that whole peninsula. So invariably the initial reaction from markets was a bit of a risk on mentality return to the markets. The thoughts of a particular kind of particular maybe conflict in that part of the world, whether it's sort of China or North Korea, subsides for a short while, and of course that that makes markets a little bit happier, and of course that has a knock-on impact. So whenever you might be watching this, you can try and get an understanding of that. So what we'll do is just I'm going to just very quickly to start with on the sort of the dollar pairs. It's just to switch them all up to the monthly chart if they're not already, so that get a bit of an idea what's going on. So one of the reasons I said I want to sort of deal with the monthly chart is for myself, I do this myself. Within the first day of the trading month, especially if it's like the trading quarter, I like to go and just look at the monthly candles of that kind of all of the major instruments that I'm engaged with, because a lot of the time there's actually nothing to see or do, and and that is actually fine. All right, that's absolutely fine. But you know, invariably when we see something that is of interest to us, or something that is giving us a either a signal or a warning bell, well, that invariably can be quite important. Okay, and that, you know, that gives us, you know, when we see that on the monthly chart, we know that there's a good, you know, there is a good chance of that following through. So let's have a look at the you know, the dollar index. Okay, so you know, I said if you're new to trading, you know, we looked at it a few weeks back. Okay, and its importance. This is the weekly chart. Okay, this is the weekly chart. So remember, you know, how we've had our chart set up right from word go, namely that invariably, you know, we had just green bullish, red bearish candles, a blue 20 period moving average, a red 50 period moving average, and a green 200 period moving average. We had fractals as well to help us, and just drawing in significant levels of support resistance horizontally, as you can see, or drawing in trend lines, or drawing in particular elements that were of interest to us. Okay, and I'm just, you know, looking at here just on the where we go on the dollar index, just going to draw in some sort of supporting trend lines that we've seen. Okay, just that as well. So you know, dollar index. Okay, if I just go down to the daily chart, here we go. See, zoom out. Price was grinding its way. Price was grinding its way up, and then here at the end of the kind of, you know, sort of here we go, end of May, what we had here was, you know, a double top here. This is of interest to us. The double top. It also was made up of two key reversal candles there, double top with two key reversal candles. Okay, those are a particularly interesting reversal trading pattern. Okay, that we've covered quite a few times here on mastering the 4 M's of trading. So, you know, what I suggest is, you know, if you're not aware of them, go back and go through the sessions and you'll find them. Okay, but you know, when we're getting a double top, which is a reversal pattern, which is, you know, on chart 5, is, you know, what is price doing? Is it part of a bigger chart pattern, you know, that has price action signals there, you know? So, you know, for a while we were a little bit right. Okay, maybe this uptrend in the dollar is taking a breather. We don't necessarily know, you know, if it's at that time, if it's just completely ended, but we know it's going to probably take a breather. And actually, you can see yourself. That's what happened there. Okay, that's what happened. It sort of just, you know, drifted its way down, hit the 200 period moving average, you know, which has acted as a level of support before. It came a bit of a trend line there, bounced off it. Okay, and then here we see price was trading between the 200 and the 50. Okay, if you remember what we were looking, well, when price was here, even though, you know, it was putting in a double top, you were still expecting it to be in an uptrend because price was, you know, above the 20, above the 50, above the 200. And then we get the reverse pattern, then price follows through in it, bounces up, hits the 50 again, and drops away. Okay, drops away and breaks that trend line. Okay, and interestingly, you know, we thought we'd be interested to see, you know, would we have some continuation? Would that be the kind of end of the dollar strength that we've seen? And you can see price last week was a little bit, you know, I'd call that flighty, really. Lots of wicks to both sides, not really sort of very decisive. What I'll be looking at and what interested me here is as I went up to the weekly chart, is that actually what we saw was, you know, the candle here broke through and closed beneath the weekly 50 period moving average. Okay, it tried to act as support, but actually broke through, closed beneath it, and that was the first time it actually, you know, closed beneath it since, you know, since basically end of April 2018, and that's, you know, that's you know, it's a good sort of 12-13 months of us being beneath, you know, since we've been beneath that you know, 50 period moving average. And now since we've got there, we've had a little bit of a bump. Okay, we've had a little bit of a dollar bump there. Okay, if I just go down once again, if I go down, maybe let's go down. I don't know. Let's go down to the weekly chart. We can see this is the hourly chart. I do apologize. This is the hourly chart, and this is actually the sort of indication. I mean, this is where we close kind of on Friday, and then invariably this is where we opened up. Okay, it's where we opened up on Sunday night. Okay, Monday morning, depending on what part of the world, we gapped up. And prices continue to sort of drift its way up there. Okay, so there's been a reaction to all of this news. It's been positive for dollar in that sense. Okay, and the initial reaction. Why might that be? Well, we're going to have a little look at a couple of charts in a moment, and that might actually help us. All right, but all we can see is that at the moment. And if I go to the monthly chart, okay, if I go to the monthly chart, well, you know, what I'm interested in is, well, look at that candle on the monthly chart, okay. We just talked there about how the 50 period moving average had been broken on the weekly, but also interesting on the monthly as well, okay. On the monthly, okay, the price had broken through that 50 and closed beneath that, okay, on the sort of the monthly chart. Now that doesn't look like a terribly bullish kind of configuration there, right? Now, of course, things happen much slower on the monthly chart, but you know what you'll also see is that when you do get moves, you know, that are excuse me, you do get moves that are pretty big broad moves like that, or a big big broad candle. It is an indication that some sort of shift has been happening, and so I'm going to be interested to see is it a case that we're going to actually just get a little bit of a bump initially, but then we'll actually start to see dollar weakness for over the summer. So a kind of monthly candle there is giving me a little bit of an indication that the bulls aren't running. Bulls aren't running wildly in US dollar at the moment. Okay, it's they've been put to bed for the moment, and I'll wait and see on the weekly chart how that kind of pans out over the next few weeks and months. So if we look at that, so we just saw that dollar candle was a little bit dubious, and and if I go down to, here we go, this is a chart on dollar Canadian, and I'm just opening up and I'm just drawing in my levels of support and resistance. Reminder this here, just looking at to begin with, just where are those extremes, then looking for particular levels that I see being touched quite consistently, giving us a very, very quick, clear indication of how the market is operating. And we can see that if I just zoom in once again, we can see that interestingly that on the dollar against the Canadian dollar on the monthly chart, that was also a very, very sort of very strong sell-off month for that. Okay, very, very sort of weak month for the US dollar, very strong month for the Canadian dollar. You can see that there, and the Canadian dollar is around about that 50 and 20 period moving average there. Okay, it's interesting to see. If we go down to the weekly chart, it's it's on a weekly chart, okay, it's price broke, it's 50 and it's 200, okay, and it's down beneath it, and I'll be interested to see if it bounces off it, but it's pretty clear that that is that's a pretty strong sort of selling sentiment there that was in the dollar against the Canadian dollar, right? Okay, and so I'll be looking to see if I'm seeing that on the sort of the dollar index on a couple of other currencies, well then it gives me better confidence to be able to sort of take trades on the other currencies when I see that it's lining up nicely with what's going on with the dollar index. So here is the dollar against the Swiss franc. And excuse me, just a little sip of water there. And the monthly chart, and kind of interesting levels on here, right? That we've had on before. Let's just okay. So what do we do? We open a chart, we start drawing in our levels, okay, drawing in level support resistance, looking at particular extremes, okay, that we can see prices touched and very clearly and strongly bounced away from. We can sort of start to identify those, start to look at them, see what they are bringing to the. You can see that actually there's quite a few of them there, okay, that they're just going to try and tighten it a little bit. You can see that this kind of level here, okay, that actually just price was just constantly flipping around about it, okay, and that's what we're trying to sort of make ourselves aware of, all right, but. We can see that the dollar Swiss franc, it's been an interesting one. I remember these trading announcements. Here is where the after having had a couple of years of real sort of Swiss franc strength, okay, across the board, which is great. Like me, you were buying Swiss franc and selling everything else. This is where we had the peg from the Swiss National Bank. You can see it there, and price actually rose up, and then you can probably see this rather sort of horrendous candle there. That was the day when, a few years later, Swiss National Bank removed their peg, okay, against 120, and then we can see that there was absolute pandemonium in that market. Then since then, if you look at the if you actually look at the dollar against the Swiss franc, what we can see is that we've just been sort of grinding our way up slowly and surely in a little sort of tight column that's just getting tighter and tighter. And if I start to look at specifically, the kind of the charts and what I'm looking for. Once again, this is the monthly chart. We can see that for the last 2 months, okay, there's been some sort of kind of significant US dollar selling there, okay, which would go in line with what we just looked at there on the dollar index, namely to show that we've had a bit of a sell-off. We actually, sort of last month closed beneath the 50-period moving average again, even though we've pushed it back above it, sort of an intraday trading today. But we can see that there's not necessarily a signal right here, right at this moment. But actually, what we're looking for is just to make ourselves aware and just to see, will that price actually just hold at that level, or will it fall through and create something much worse? So if you're at the sort of end of the chart and stuff, you might like to sort of look at project that kind of particular level in terms of what you can look at, how you can give you something to make yourself aware of. What is also kind of very useful is placing the sort of that level also when the sort of whether it be the captain or the boss or the officer commanding or whatever you wish to call them, just to see how they adapt to how they adapt to what's going on within those particular markets. And what I'm interested in also is the just drawing another level there is what can be also very interesting is just drawing in where that market opened, okay, this month, and and also where we see this particular candle opening for this month, and there is over the next couple of weeks we'll refer to that level and see if that's particularly a level that we can do business at. But we can see that that dollar against Swiss franc on the weekly chart has literally just been bouncing back and forth. It's not really done anything of any interest for anybody recently. I don't necessarily foresee that changing anytime soon, but which probably means it'll probably be changed within 2 weeks. But hey ho. But that is just us just recognizing that is just still in a bit of a range, okay, and that that admittedly that nice drop at the end is a nice one. It's it's not usual to sort of try and capture sort of just every trend like that where a particularly nice move sort of takes off. So let's have a look at dollar Japanese yen. All right, let's just zoom out a bit here. Okay, so this once again is the monthly chart, and you can see there's been some quite significant swings here on the monthly chart. You can really see that how that price how that price can move really. It really can. But when I'm looking at dollar yen, okay, one of the biggest, most major trading pairs in the on the globe. Well, then I'm looking at that and just trying to work out, like, well, what are we doing here? What are we seeing here? And it's just we're drawing in significant levels as always, and starting with our extremes and starting to work our way inwards to identify significant levels where we've seen price sort of bouncing off strongly. That's what we're particularly looking for, where we see clusters, okay, clusters of fractal farms there, okay, that are starting to crop up and show, because that gives us a good indication of what might be there. And yeah, I appreciate that. This is the monthly chart. So if I go down a little bit, this is it's just it's a little bit of a strong candle, but nothing you can see from the chart. There's nothing there really really terribly shocking there, okay, in terms of it. It's just what I find interesting is if I go down to the daily chart, okay, that that was a very nice trend there for 2 months, very nice trend there on dollar yen, okay, on the daily, very nice trend there, okay, nice way to sort of sell off the flag pattern and other ways to sort of join on to that particular trend. But actually that all that move was was just like sort of maybe a couple of weeks, 10 days on a monthly chart. Okay, hence why it doesn't look as significant as it might well have been. I'd say that at the moment that dollar yen is just hanging a little bit in air at the moment. I've read some of the spats, or maybe not the spats, but the undercover sort of commentary between Mr. Shinzo Abe and also the sort of the Trump White House, and it's true that there are some you have to learn a particular way to go about dealing with Mr. Trump, but I think Mr. Abe is probably one of his closest allies at the moment. But what we saw looking on that chart is, we had a push down there. Okay, last month, okay, it was a little bit of a pin bar there. We can see that those kind of levels there, okay, have been touched down there towards before, and I'd be kind of like wary, sort of wanting to get involved with anybody or anything just around here when it's literally just 20 pips above a level which price has broken off before. Okay, so I'll just be adding that to my watch list to see, is price allowed to drop down to the to that baseline, that drawn trend line, or will it actually sort of avoid it and return it? But we shall wait and see over the next couple of weeks. Okay. Dollar yen we've just looked at. So Kiwi dollar, okay, monthly chart, okay. So there's not really massive levels of excitement with this, and that's absolutely fine. Here we're just drawing on our levels here, okay, just seeing what is available for us. Just go about our business and start just drawing in our horizontal levels of support resistance, seeing if there are any particular levels there that we need to be aware of, or we want to just notice whilst we're here. Okay, so and a Kiwi dollar we can see has actually just been in, it's just been a little bit of mostly a downtrend this particular year. But here's what I'm looking at here. Okay, remember step 5 is we're looking at is it part of a bigger chart pattern? And what I'm kind of looking there at this precise moment on the weekly chart is we're looking at, could that be a double bottom? Okay, could that be something that is of relevance to us as a well, I was going to say as a monthly trade, but actually traded for any just being able to sit and watch this. Remember, every candle is the equivalent of 30, somewhere between 21 and 30 days, of trading, and it's a case of just being able to take little offers like you can get them. But I'd say that's definitely a sort of a W bin there, okay, and it's definitely something to sort of keep an eye on, because I think there might be opportunities to play that will come up over the next few particular years. So I wouldn't necessarily be looking for the guns there. Okay, it's just a case of just be patient and wait and see what that particular market offers you. Okay. Euro dollar, okay, so here's the monthly chart as well, and you can probably see what's been going on there. Okay, for many years, okay, price was just being battered down back and forth, and they were just providing money to to just basically to sell the euro against the dollar. We had a real strong drop there and a little bit of a double bottom there. Okay, sort of one kind of leg here up to 2, down to 3, but actually it just hasn't really taken off. It's become more of a triple bottom there now before we look at moving. So that sort of trade in Europe, just it flew up there from about 108 up to around about 122, 123, And then the monthly chart, you can see it's just literally drifted down. It's just been hugging that 50-period moving average, right? Remember, we looked at the dollar index, okay, and the effect that had. This is pretty similar, okay. This is pretty similar, okay. It's been just doing that, and if I go down to the sort of the weekly chart, we can see that it's just been drifting away there. It's just been kind of just drift its way down there on the monthly, sorry, on the weekly chart. On the monthly chart, yes, we've got a backup of our 200, but it would take me a bit more than that to convince me to start looking at it. But I would just take that as a note, okay, that maybe something might happen with all the other elements and ambushes that are going on around here. So this is pound against the dollar, okay, on the monthly chart. You can see that that's just been one heck of a downtrend for years of one sort of another. But it might be said, some people might say, well, there's a very scratchy sort of double bottom there forming there. I think that's kind of reaching a little bit for it there if I look at it. But looking at what was the price action like here for last month, okay, and actually the price action for last month was just a little bit of a higher harami, sorry, a little bit of a spinning top there, okay, small little spinning top there compared to the month before, okay. It just span its heels, working out what's going on next, and that's what I think has everyone a little bit perplexed when it comes to basically the sort of present route of the sterling. We can see that it's been basically just hammered lower. That's what's happened for it. But we can see there's a little bit of a spinning top. Okay, spinning top can be an indication that some indecisions arrived to that market, and it's actually time for a change. Okay, but as you can see that there's probably sort of quite a few of the bad guys lined up in helicopters and an aircraft here who, should price drift down into this block, will be ready to wanting to sort of take a pop shot at those anyone kind of sort of trading in around there. So I'd like to see price sort of drift its way down into that sort of order block, but then I'm actually looking to be I'd look to be a sort of a buyer there with a sort of the kind of a good enough stop up to about 48.50. That's what we'd be looking at, and I think that would be a nice little that would be quite a nice move. And then if you look at Aussie dollar, I suppose it's it's not necessarily massively dissimilar in the sense that it just got a bit ahead of itself, and it just got a bit ahead of itself, got itself into spot a bother, and that wasn't the best way to act. And we can see that actually it's been quite a significant drop there. We look at those kind of levels. Okay, follow that 111. Okay, 111 down to 89. Okay, that's a pretty significant drop there over the last few years. You can see that for yourselves. You can just drawing on those kind of levels of support resistance, just making sure that they're there. Just have a look. Bear with me a moment. Just trying to so Aussie dollar, a bit like euro dollar, pound dollar, pretty much everything against the currency. The first one we looked at was the dollar index, which has been whilst it's running out of steam now before it rolls over, it has been for the last 2 years the sort of top dollar in terms of currencies. And actually, what we saw is Aussie dollar has just been kind of the whipping boy, hasn't he? Really. So it's whether you like it or not, that just unfortunately happens to us all. Okay, in markets, it's about learning how you particularly deal with it. I'm kind of intrigued to see that they had this kind of double top here, okay, which was just see if I can, come on. see that actually there's a sort of kind of moved into an M pattern there. Just basically prices just considered to just sort of drive its way lower. And just looking at there, a bit of a level of support line, it might be a good idea for we saw how that trend line was broken, but now we're actually looking at seeing it just drift its way back down. Okay, 70 is now acting as the resistance line, but we can see we're above it, and actually looking at what can we do to move there. Okay, at the moment there's no real trade signal there. Okay, I need to see it actually sort of just reverse and start to sort of look and help its way, all those kind of like long bullish traders, because I think that's what we need. And maybe the sort of view out of China, okay, and positive news that comes out of basically sort of a China and US conciliation, that might actually have a huge net positive impact for Aussie dollar. So there you go, ladies and gentlemen. So we've just had a little bit of a look through there, okay, in terms of just the dollar and in particular from the monthly level. Okay, sometimes I find that intraday traders are a little bit scared or frightened of the sort of monthly chart. You don't have to be. A lot of the time it doesn't have to be there, but at the the start of the month, give yourself 30 minutes to 60 minutes and go down and just go through those monthly charts. One, you never know what might throw up for you. Two, I guarantee that it will help you improve your trading style as you get to learn to understand all these different and particular timescales and their impacts upon your preferred trading instruments. So there you go, ladies and gentlemen. As always, I wish you the very best of success in your own trading, and I look forward to speaking to you later next week, either at this particular session or at for one of my colleagues at their particular session later on in the week. All the best, and trade well, ladies and gentlemen.